Hello my fellow traders and welcome back to Viking FX. Today I'm gonna answer some of your questions. A couple of you have asked me about how I do my multiple time frame analysis, meaning how I make a top-down analysis where I start with the higher time frames and then move downwards. I've been closing some of my trades the last couple of days. Some of them went against me, a couple of them hit their target. So right now I have three trades left. I have a short in US oil, I have a short in dollar yen, and I have a short in Euro New Zealand dollar. I'll have a look at each of one of them and show you why I went in. With the dollar trade, I actually made a mistake. I should have waited a bit. I was simply not patient enough. But let's have that as a last trade, because then I'll show you two trades where I did what my plan told me to do, and then we can see what I did in the oil trade that was a bit against my plan. All right, so let's start with the dollar yen here. Now what I do normally is that I start on a weekly time frame. I don't mention that too much because it is actually, there's not much analysis going on here. It's just a quick glance. I do draw some major tops and bottoms, and I normally just, let me see here, normally go in here and make them another color. So when I look at the lower time frames, I can see that when I have this pinkish color here, then I know it is something from a weekly time frame that I need to go and check up on. All right. What I do then is I draw some basic trend lines here. Now, when we are in a downtrend, I draw them at the top of the chart, meaning that I don't really care how much it drops from here. We're still in a downtrend. What really matters is if it starts to break up. So in a downtrend, the upper trend line is always the most important, and in an uptrend, the downwards or the lower the lower trend line, I should call it, is the most important. So in a downtrend, when we break up, that is where you need to adjust your positions or your view on the positions, and in an uptrend, it is when it breaks down. All right. Now the dollar yen broke down, and I should say I'm not drawing these in quote-unquote correct manner. It's not like I'm trying to fit some tops and bottoms here. I'm just drawing a general line and see, all right, if this one starts really to get broken, there might be a change in trend. So I might sometimes wait a week or so before I really start to acknowledge a trend shift, because this is on a weekly chart. So here, I am looking mainly for downtrends. It's not like I can't take a long trade, but it'll need to be on a lower time frame, far lower time frame, because on a weekly time frame we are going downwards. All right, then let's have a look at the daily time frame, because that is where a lot of the magic happens, if you call it that. Now, first of all, here in the green boxes, I draw up the tops and bottoms where we should or could meet some resistance or some support. So these are important lines. Then I try to make maybe a bit more precise adjustment of the line here, so I get a feeling of where is the top and bottom in this area here. Now, I should say that this line, of course, cannot really be drawn before we had this point. So it's not like it hit this one and then I could figure out that we were going down here. I actually was in a short trade here. I'll show you that in a second. But overly, I'm looking at tops, then I draw my box here, bottom, then I draw my box here, because then, as you can see, they tend to get respected. All right. Now, more than that, on a daily time frame, I am not looking for short trades on lower time frames unless I get some really bearish candles here on a daily time frame. Let's say, for instance, and here I'm talking about candlestick formations. If you don't know anything about that, there's something called a spinning top and something called an engulfing pattern. And for instance, what we saw here, let me just show you this one. This one told me that since we were in an overall downtrend on a weekly time frame, and we had a bearish daily candle here that engulfed the entire green candle here, meaning a bearish engulfing pattern is where the top and the bottom engulfs the body of the former candle here. So here we had a bearish engulfing pattern, meaning that now I was allowed to start looking for short trades on a shorter or lower time frame, but I couldn't take it on this one because this one had to end first. So what I did was, let's take the daily chart again here, and we will, here we go, we'll draw a thin line here so that we can find this spot when we go down to the lower time frames. Now let's have a look at the 4-hour time frames here, the time frame. Now what you can see here is that this is the daily candle that gives us the, we can have a look here, the candle here. We can, when I show it here on the 4-hour time frame, you can follow the line up here. As you can see, this dotted line, it moves, and meaning that the daily candle ended here somewhere. So I'm not allowed to take a short trade after this point where this day is over. All right. So what I am looking for when I'm taking trades like this is not the breakdown, but it is the retracement to a structure level. So we actually had a structure here where we saw things going up and down from here. We broke that structure, went down, went up again and tested this area. And then when we started to go down, I could take a short. Now sometimes I do that from the 1-hour time frame if I need a bit more of on a confirmation. So what I did here is it went down, it went up again, tested the earlier structure. That's also very easy to spot here, the early structure here. It can be a bit messy on a 4-hour time frame, but what I looked for here was some sort of confirmation that this level was being, the price was being rejected from this level and that this level was respected. And I saw that here. Let me just show you. It went up, a bit down, went up again and actually broke the structure. But then we went down, tested again and went south. And I actually took my short on this trade here. As you can see the line here, I took it here. And yeah, it had wobbled a bit back and forth today. But right now we are in a very good move downwards. And when we are looking at the overall time frame, we can look at it at the 4-hour here. You can see that I have put my target down here where we have structure lows. Now, if it really moves strongly downwards, I might move the target a bit. I'm not 100% certain where it'll start meeting some resistance. But what I am looking for is that I can exit this trade before time if it starts to go something like this. Let's say it goes down, moves a bit up, moves a bit down, and then breaks structure again, then starts to make new higher highs on a 4-hour time frame. Then I simply exit, because what I do want to see, the reason why I went in was breaking structure down, up and test, and then being rejected. So of course, if I start to make a new higher high, then this trend setup is simply gone. As you can see, as I speak, it is moving down quite nicely right now. All right, that was one of the trades, and this one is playing out very beautifully. And when I remember to follow all my rules, there's actually a very high success rate on this. I should say that the risk to reward is somewhere between 1.6 and 2 here. And what I'm looking for when I'm taking trades like this is at least 1.5 to 1, meaning that the risk I'm taking up here, I put my stop just above this cluster here, the reward here should be at least 1.5 times higher or larger than the risk I'm taking. That way, if I just have 40% of my trades correct and I can have a 1.5 to 1, then I'm at a break even. So that is nice enough. All right, let's have a look at the other trade that was actually also correct. As you can see, I'm coloring my trades out here depending on what sort of trade I took. And this trade is a bit different because this one, the Euro New Zealand dollar, as you can see here, if we start looking at the weekly time frame, just as I did before, what we have here, if I'm just, I don't know why I haven't drawn a trend line here, but somewhere here, we could think that we were going upwards from here. But what it actually has turned out to is a bit of a zigzag range bound trade here. What we can also see, which is very good to have in mind, is that we have some bottom formation here, which makes this one a very solid bottom here. There's also some down here, and I do like to have them plotted in. As you can see here, that bottom here actually were completely perfect fit with the two down here. So I do like to have these longer term tops and bottoms drawn in, so that when we get further out in time and I'm looking at a lower time frame, I all of a sudden stumble upon one of these larger areas and I can go back and look at what this is all about. Now, before I explain how this trade is different from the other two, I should have give a great thank you to NSB. That is the sponsor on my channels right now. It is a broker that is specialized in Forex, commodities, and a few stocks and CFDs. It is a pure ECN broker, meaning that it is lightning fast order execution, and the broker is not trading against you. They have low spreads and they are regulated by all the large regulators in Europe. So it is a very trustworthy broker, and I hear all good about them from the people that have tried them. I do like them a lot, and I'm going to show you some more videos in the near future here about how I use them, how I use that MT5 platform that they are using in their setup. All right, let's go back to the charts here. As you can see, we are in a range bound situation on the Euro New Zealand dollar, so we are going down on a daily time frame. Let me push the right place here. We're going down to a daily time frame, and as you can see, I am short here. And right now, I knew that if I were to take a trade in this scenario where we have hit this upper resistance several times, if I were to take a trade, it should be a short trade when we were here at least. Maybe if we get down here, I can start looking for a long trade. But as you remember, what I'm looking for is confirmation on a daily time frame that we are really getting some sellers into the area. And what we can see here is a big green sign here. Then we have what is called a doji, which is what is called a doubt candle, meaning the price starts here, moves down, moves up or up and down, and then ends at the exact same time. This is a doubt candle. And then we see an engulfing red candle here showing us now we should look for a short trade. So at this point, and this is the 33rd, so it is 8 days ago, I was quite certain that if I were to look for a trade in Euro New Zealand dollar, it should be a short trade. All right, let's move on to the 4-hour time frame, because what I did here, as you can see, this is the area where we get the large bar down. So what I did here is I waited for some sort of confirmation that I should take a short trade. And what I saw here was 2 bars up. And I saw it coming up to this area here. Let me draw in here, where we have seen these bottoms hitting here. So this is an area that I knew this one needed to be respected. We can just have a look at it on a 1-hour time frame like this. Let's just have a look here. What you can see up here with a bit clearer here is that we are breaking structure here. We are breaking these lows here. Then we are moving up. We are bouncing on the lower part of this structure, and then we make on the hourly time frame, we make a bearish engulfing pattern, meaning that the bearish pattern, the bearish candle here, completely engulfs the green one. Now, as you can see, if you're looking at the time down here, This was around 3-4 o'clock in the morning. And I was asleep there. So when I awoke, I took the trade here around 7:30 or something, and that was not really a problem. I'm not using my hourly time frame too much. So looking at the 4-hour time frame, I just took the trade here, and as you can see, I could put my stop up here and have a reward to risk on 2.11 if it were to hit this bottom down here where I suspect we'll see some resistance. Right now I have my stop loss moved down to this top here, meaning that if we break through that, we have broken structure and it is no longer a downtrend. But what I suspect is that my target will be hit down here, and we have made a nice 2.1 something, 2.1 to 1. So Euro New Zealand dollar is going quite nicely right now, and we are at 1.5-ish in the reward to risk. So very nice trade. Then we have the last trade, and that is the oil trade. And that is the one where I actually made a mistake, and I thought I would show you that, because even though I have done this for a while, I'm absolutely not perfect in any way. First of all, I should say that I might have wanted to listen a bit more to the fundamentals, to the macro in the world, because there's no doubt that oil have broken this on the weekly time frame. I think you can see that here. Absolutely good uptrend. It is breaking down, so yes, we're looking for short trades. However, there's a hurricane running right now. Ida is running in United States right now, and it is hitting a lot of the oil fields, a lot of the oil rigs down in the Mexican Gulf, and that is pushing the price upwards. And that is a bit of a unfortunate scenario if you're short. So I might, in hindsight, I might not have should have taken this trade, but it is running right now. So let's see where it ends. Let's have a look at the daily time frame, because this is actually where I made the mistake. I got a bit trigger happy here, because what I did was that this candle here, it went up. We were up touching up above here, and as you might remember just from the two other cases, what I need to see on a daily time frame, I need to see a daily candle close negatively. So when I took this trade, we actually had this big candle. I took the trade yesterday. This big candle was red. So it had been up here. It started here, but it was red, and it looked like it would keep be more and more red down here. So what I started, and that is where the mistake I made, I started to guess. I started to say, oh yes, I know the day is not completely over yet, but I think this candle will keep going down and end in a very large red. So I took my trade here, which was a mistake, because of course I needed to wait until the daily time frame was confirming that we actually had shifted direction. As you can see here, this was not a perfect scenario, but we have this candle up. We had a candle down. It was not really an engulfing, and it was not a pin bar, and it was not the other candles I'm looking for. But however, it was red, and I might be able to justify looking for some bearish trades here. But I don't have that yet, and actually we need to get a bit further down to, we need to end the day around 68.40 or something like that before this is actually a bearish engulfing pattern, and I'm allowed to start looking for short trades tomorrow. So it might turn out a great trade, and I hope it does, but it is a mistake. I should not have entered yet, but I am in it. So right now I'm just in a little drawdown. Let's have a look at the 4-hour time frame. And as you can see here, one of the reasons why I went in here was of this candle. You can see I draw the arrow here so I can remember when I entered. It was this candle here, because we had a price here closing here, and then we had the price jump up to here. It simply gapped up. I think it was over the weekend, and then the sellers came in massively and sold out and made a bearish engulfing pattern. And I thought, this cannot end anything in any other way than very, very bearish. So I took the trade here, I think it was, and it looked good in the beginning, and then it turned around, and now we are just wobbly here. So it actually looks okay, I would say, because we were the price was rejected here. Then we got rejected by a big pin bar here. We got up, got rejected here again, and if we're looking at the 1 hour time frame, let's just have a look here. As you can see, if I should have taken this trade, well, the daily candle is actually not ended in the right way yet. But if I should have taken it from a later time standpoint, we should have taken it where it got down on an hourly time frame, broke structure here, got up, tested this structure, and then was rejected. So I should actually have waited, and right now the oil is going somewhat up, and that is also because the dollar is going down, of course. So this dollar trade might end up as a loser, and then I have only myself to thank for that, because yeah, I should have waited till I saw some more confirmation, and that is the price of being a bit greedy. So now you know, I also get greedy once in a while. So basically, if I were not in an oil trade, and if you're thinking of taking a short oil trade, I would say that you should wait to see if today's candle here closes in very red, and then you can start looking for a short trade tomorrow. And if it does close very bearish, then you should, let me just draw in here, then you should look at this area here, and you should wait for a break of that area, a retest, and then some sort of a sign that the price is turning around. You might get in a bit later than I got here, but then again, you get in with the right short signal instead of me jumping in prematurely way too early. Yeah, it was actually down here. So that was a stupid mistake to make, but let's just cross our fingers and hope this one will go in the right direction. If it does, and you could say we're very close to this upper downwards trend line here coming from the weekly time frame, if it turns around and doesn't hit my stop loss up here, we can watch a trade that has some very good downwards potential, both if we're looking at this bottom of the channel here, which is very nicely aligned with the upper channel. So we also have the bottom down here. So as a first test, the first target, I would be looking for this one around 62. That's 10% down, and it would actually be a 4-hour profit trade. So let's cross our fingers and hope that this one really gets turned around, but otherwise, you know who to blame. That's all for now. I hope that gave you a bit of insight into how I work this top-down analysis. And I will once or twice per week give you some examples of trades that I am actively in right now, or that I am thinking about taking. Then you can see how they span out. As I said, there's quite a high success rate on this way of trading, but it takes a lot of patience, and I actually can see when I'm looking at my trading diary that the most losses, the largest losses I take is when I get impatient and start to jump into trades that are not completely formed yet. So that is a thing I have to work with, but I am getting better at that. Okay, that's all for now. Please shoot me some questions either underneath the video here or at the Facebook site Viking FX that I have made for it. Remember, this is a hobby project, so I don't have any fancy intro or logo or anything, not yet anyway. Let's see if there's an interest for this. If there is, I might do a bit more on the graphical side of it. And also a big thank to NSB, the broker, that I am getting more and more excited about for each day that I use them. So have a look at them. I'll put a link to them as well below here, and have a nice day. Good trading to all of you. Bye.